My name's Matt Scherer, and welcome to the educational series here at iSoftpull. Today, we're going to be talking about my experience with the mortgage industry. So my experience with dealing with mortgage professionals here at iSoftpull is a lot of them have questions, and they're very valid questions. Some of the questions are, what is a soft pull? Does it require consent? Does it activate trigger leads? Does it require a social? What's required to get started? If I'm an LO, can I pull credit? Is it a tri-merge? Is it only one bureau? Is it all three? Do I have to have a physical office? So my job as a sales executive is to be an expert to answer all your questions. One of the biggest misconceptions that I come across is people in the mortgage industry that really don't know what a soft pull is. For me, to explain it simply, it's a credit report, the same exact credit report you would get when you do a hard pull. It just doesn't place a hard pull inquiry on the credit report. Therefore, it doesn't lower the score, it doesn't activate trigger leads, and it also gives you the information to move forward in the most professional and persistent and proficient manner. So let me tell you a story about a guy I helped on the phone today. So I talked to this guy, Roy. He's a mortgage broker. He's a branch manager running an office with several other LOs that are out in the field, contacting people, cultivating leads for them. And what he heard from another one of his work associates is that they use soft pulls in order to pre-qualify their customers prior to even talking about a loan application. And they're able to have much better conversations right off the bat with people because they're having conversations based on credit reporting data straight from the bureau that's able to inform them on what's the path of least resistance in order to get these people funded. The thing he said is, I only get paid when a deal's closed. So all the upfront work of, talking to people, trying to get an idea of what they think their credit report is like versus actually having a credit report is the difference between night and day. You can't even compare the two. So right now what he's doing is he's doing pre-assessments with every single person that he meets on a daily basis to ask them, what do you think your credit score is? Do you have anything in delinquency? Do you have any foreclosures? Do you have anything in collections? And what he's finding is that 40% of the people he talked to are uninformed on their current credit standing because things change from month to month. And every single time a new credit report is pulled, there's a little bit of difference. Sometimes it's up, sometimes it's down, but he wants a way to find out now. So right now, he's going through and doing tri-merges on all the people he talks to. He told me that tri-merges are about $27 a pop. He's wasting over $1,080 per month on these tri-merges pulled on people that have the credit profile that's not able to even be moved forward to even do a loan application. So he's wasting a ton of time, he's wasting a ton of money, he's wasting a ton of energy. He liked the fact that with just a name and address, he would be able to get the full credit report with the FICO score. He said, by having that information, it's gonna give me all the facts and figures in order to move forward in the most efficient manner in helping every client that I speak to. Whether I can fund them today or next year, at least we know up front, and they respect the fact that he's actually saving their time. He's saving their credit profile because they're not putting a ding with the hard pull. It's a win-win for everyone.